It's now time to greet Homes Today, which will be presented here by Miss Audrey Forshey. Audrey is a well-known realtor at Remax Realty. By the way, she's also a senior consultant as well as an advisor. Today, Ms. Forshey has alongside her a senior loan officer by the name of Mr. Barry Filderman. I know a great number of our viewers like Mr. Filderman's style and knowledge on our screen. Today, Audrey questions Barry about minimum credit for a mortgage. Let's look, let's listen, and let's learn.
Hello viewers, I'm Audrey Forshey and this is Homes Today. Thank you for joining us again today. Today what we're going to do is we're going to talk about credit, and if people are thinking about buying a home and they may have some credit issues and they're not sure if they can buy a property, or if they do have some credit issues, what is it that they need to do to fix those issues and be able to purchase a home. So today we have Barry Filderman who has joined us. Thank you for coming and joining us again today, Barry. Barry is a loan officer in Maryland. He does Virginia and DC as well, but mostly concentrates in the Montgomery County, Maryland area. And Barry is very good and very versed at dealing with some of these issues and helping buyers achieve their goals in being a homeowner. So we'll start with some questions and see what you can do and if we can help you guys out. So Barry, if I'm a buyer and I think I might have some credit issues, I guess the first thing I need to do is call you and ask you to run my credit report and see what it shows up on my credit report, right?
Yes, that would be the prudent thing to do, but it's such a simple question, there's such a complex answer to it. It all depends on what house you plan on buying, what program that you decide to go into, what program you qualify for. So people say, what's the minimum credit requirement? And it really depends on the program you're going into. If you go into a higher priced house, the credit requirements are much more stringent than if you go into a lower priced house.
Okay.
If you go with a conventional loan or a high balance loan, your minimum credit requirements are going to be far above than what an FHA would be,
okay,
what a VA loan would be.
Okay.
So you really need to see a lender before you go. And that question is really for agents as well as people, because you don't want to send an agent out with customers and show them properties they don't qualify for.
Right.
As a person, you want to know what you do qualify for, and there's different things you need to think about. You need to think about mortgage insurance requirements. You need to think about the program you're going with, down payment, all goes into what the minimum credit score requirements. So it is essential that the customers go to a lender and pull that credit report and see what you're dealing with. Also, if you go to the right lender, you can see pretty much by looking at it if those credit scores could be raised, if there's some credit repair that could be done.
Okay.
And by raising the credit scores, we've become very lazy in our industry. If you have a credit score of 680 and I know I can get it to 700, then your mortgage insurance is less, your interest rate is less. So we have a tendency of saying, okay, I can get you a loan here, and we're winding up hurting the customer because if we just took a little extra time, we could actually do better for that customer. So you got to get into a lender, you see what credit score you have, you see what potential credit score you have, and it might be that the only thing you qualify for is an FHA loan. So you don't want to go out and look for homes that are not qualified for FHA financing.
So if I'm looking at a home and I have if I have a credit issue and maybe I can get my credit up, and I could buy an FHA through FHA. FHA can go up to $625,000 though.
That's correct.
Or am I don't have to stay below a certain amount depending on my credit. Do you have to have really high credit to get a $625,000 purchase price on FHA?
No.
Okay.
No.
All right.
FHA actually goes down to a 580 score, and there's plenty of companies out there that'll do a 580 score.
Okay.
Most companies are minimally 620, and a lot of companies are minimum 640 type of thing. But it's up to the company. It's not FHA. Now, the thing that you want to deal with is you need to understand that if you're dealing with an FHA loan, you got to be careful what county you live in. Now, we live in a very
affluent county.
Yes, so
okay.
your 625 is here, but there's many places that the highest loan you can get is 271,000,
okay.
depending on where you live.
Okay.
So if you are buying a home larger than the minimum county requirement, you really got to start looking at conventional products, which is a lot more difficult to do.
Okay, and so the thing that I think is kind of interesting too is not only is it your interest rate that is affected by your credit score, the mortgage insurance. You may not get the loan just because the mortgage insurance company might not give you a loan. Okay, so when you see credit issues on credit reports, what are some of the things you might see, like the really common things that you might see on credit reports that affect people's credit? Let's say, what are the easy things to fix? I mean, I know there's things like bankruptcies or foreclosures, and those are longer term problems that have to be resolved, but maybe somebody has an unpaid student loan or a medical bill that they didn't know about. So how do those work, and can you fix those?
There's a lot of things you can fix. The first thing and the easiest thing, and the thing that affects credit scores the most, are the revolving balances. The credit bureau or credit scoring will look at your available balance, and this sometimes becomes easy. So like, for instance, if you have $2,000 worth of available credit to you, and you compare somebody that has $20,000, okay? So the $2,000, you have an $1,800 balance. You have very little credit available to you. So you would have to have $18,000 on the $20,000. So if you have very small credit limits and you only have $2,000, you can significantly increase your scores if you pay down those balances. It takes hits. For instance, if you have over 75% where you don't have available to you, your credit score is going to get dinged worse. If it's 50%, it'll be a little bit better. If it's under 50%, it'll be better. If it's under 25%, it'll be better. So you could really affect your scores by the revolving balances. That's the best way.
And so paying those down. And how long does that usually take to rescore your credit and all that?
That is an excellent question. If you go normal, where you pay it down, you wait, it could be about 60 days. If you do what's called a rapid rescore, where the lender will apply for a rapid rescore, it takes 3 to 5 business days to get that score corrected.
Okay, all right. And so do you find that people are surprised when they have low credit scores? They think that they have higher credit scores than they do, and you pull their credit and they say, gosh, I didn't know I had that. Do you find that's common?
All the time. People go to these free credit reporting agencies, and there's something that's called a consumer credit report, which is normally higher. So they come in thinking their scores are 700, and then they pull their mortgage credit report and they're lower. So many different things will affect a credit score. Now, you got to remember that the majority of the model is the last 24 months.
Okay.
So the older the problems are, it doesn't really affect your scores if they're current.
Okay.
You have things like late payments, of course, credit card balances we talked about, but you have bankruptcies, you have foreclosures, you have judgments, tax liens, collections, all those things go into what a credit score does. And there's things that you can do to potentially fix some of these things. They're much more difficult than the credit card balances, though.
They are. So if I know that when I've sold homes in the past, some of the things that I found that were kind of common for some of my first-time home buyers were student loans, where they had unpaid student loans. And I think back in those days, they could make a payment arrangement with the student loan company. Is that still how they can do it, like set up a payment program? And then does that help I guess they were in a collection type situation, and did that take it out of a collection status, or does that work today?
Well, there's a couple things that you can do. A lot of private student loans, if you consolidate them, then the loans with the late payments will be zeroed out, and you can establish new credit with the new payment. There are government programs where if you go on a payment plan like you're talking about, and you show for 6 months that you can make your payments on time, some of these student loans, they'll remove them from the credit report.
they
So I
will?
have customers
Okay.
that are enrolled in those type of programs. Depend on it's got to be a government student loan, not a private.
Okay.
Student loans are deferred. A lot of times people will think their loan's deferred and it's not, and they'll be marked late. And the student loan people, they're very hard to deal with, and they really won't work with you. And once it's on a credit report, it's very difficult to get off.
Oh, really?
The thing I always tell my customers to do is call and ask. You'd be surprised how many times that the people call and they ask, and the people are willing to remove some late payments, especially with collections, judgments, tax liens, especially the state of Maryland. A lot of times people will call up and they're very, very nice, and you can make arrangements or pay it off, and we can get it off your credit report. What we don't do today in the lending business is we don't take the time and effort to try to remove things and make things better. It's become a very lazy industry. You kind of work with what you got and you tell people, no, I'm sorry. And that's not right. There's so many things we can do
Okay.
to help people with their credit.
All right, so then we talked about the rapid rescore and rescoring in 6 months for the people to go ahead and get their credit redone. If they have a foreclosure, let's say, or a short sale, how long do they have to wait until that's been on their credit report to be able to purchase a home again?
Okay, that depends on the program.
Okay.
Okay. And the guidelines
See, I
change.
still think everything is one size fits all,
No.
and it's not anymore.
No, and everyone, a lot of loan officers feel that it's generic. So
Okay.
it's the same for Fannie, and it's the same for Freddie, and it's the same for FHA and VA, and it's not.
Okay.
So it really depends on what you're talking about. A foreclosure, if it's included in a bankruptcy
Okay.
for a conventional loan, the clock starts when the bankruptcy is discharged.
Okay.
So that's new, and that's terrific, because that's when it should start. Because a lot of times these banks, they hold on to the properties forever. They don't foreclose on them.
Right.
And people have moved on. They've been renting, and all of a
Right.
sudden now you got to wait 4 years, and you're already 2 years into it.
Okay.
So conventional guidelines have changed to when it's actually discharged. Now FHA has not done that. Hopefully they'll wise up and they'll do that. So it really depends on the program again. Some programs, if you're dealing with jumbo, they want 7 years.
Okay.
So you got to ask the question and deal with a good loan officer that knows their guidelines. Now, as far as a foreclosure is concerned, on an FHA loan, it's 3 years. And it's when the house transfers, not the bankruptcy.
Okay.
An FHA loan is a little different than a VA loan. I don't know if we have any veterans out there, but VA's 2 years.
Okay.
Conventional's 4.
Okay.
Okay, that's Fannie Mae, Freddie Mac. But there's always extenuating circumstances to these.
Okay.
So a good loan officer will immediately ask, why did you go into bankruptcy, or why was there a foreclosure?
Right.
And if it was due to a medical issue or due to a loss of job that you can document, circumstances beyond the control of the customer, conventionally will go to 2 years.
Okay.
FHA will go less than 3, 2 years, 1 year, depending on what you can document, and so will VA. So it really depends. People out there that have had medical issues or loss of jobs should not let a bankruptcy or foreclosure stop you from buying a home.
Okay. And I thought I read somewhere where medical issues on credit reports are soon to not be held against purchasers. Is that happening now? I read something about that.
That's what I hear.
Yeah.
I'm waiting for it.
Yeah.
Yeah, medical
Okay.
collections, first off, lenders don't count medical collections, so they're not going
Okay.
to make you pay them off.
Okay.
But it does hit your score.
Okay.
Now, there is legislation that I hear that soon that medical collections will be removed from the model, and it will not affect your credit score. Paying off a collection doesn't help your score. That's another thing.
Oh, it doesn't?
No, you've got to
Okay.
get the collection removed.
Oh,
And a
okay.
lot of times paying off a collection hurts your score. Because I'll give you an example. Let's say that you have a collection that's 2 years old. When you go pay that off, it updates. So the computer thinks that you have a collection now that you paid it off a month ago. Now it's a month old. So a lot of times paying off a collection hurts your score.
And it's that 24 months thing kind of starts over again.
Don't pay off collections.
Okay.
Okay.
All right.
You really want to run a simulator. You want to see what will happen if you pay that collection. But most of the times it actually hurts you. What you want to do is call the collection agency and see if they'll remove the collection. If you pay it, if there was a misunderstanding, if there's a mistake, okay, we'll pay it, but you got to delete it.
Okay.
And that's the key word is delete. And
Okay.
then your scores will go up a lot.
And you find that the credit bureaus are easy to deal with in deleting, or are they difficult?
If you prove to the credit bureaus that the creditor wants it deleted and you have a letter saying to delete, they will delete it. And then
Okay.
we do that rapid rescore, and it'll take 3 to 5 working days.
Okay, perfect. All right, and we thank you for joining us. Thank you, Barry, for all this good information. If you have any questions, contact your lender. You may very well be able to purchase a home. So check with your lender, and thank you, and we'll see you next time.